Good afternoon, everybody. Welcome to TraderMerlin Show for August 5th, the great August 5th. Before I dive into the particulars for today, I am drinking a 9-banded whiskey. This is out of, I believe, out of Austin, Texas. We won this at a trivia a few years ago, and it's just a really good American blended whiskey. So cheers, everybody, and a big shout out to two important people. My good friend Kevin Collins, whose brother you see here in the chat sometimes, Chris Collins. Kevin's birthday today, so happy birthday, Kevin. And to my father, who is on a boat in Greece. I'm envious. I wish I was actually on that boat in Greece with you right now. But cheers, Pops. I'll raise a glass when you get back into the States. And again, happy Friday to everybody. So let's get started. Yes, a nice good whiskey. So some stuff happened today that actually has me scratching my head in confusion with regards to financial markets. Certainly some of the economic data that came out today was a bit particular with regards to what it said about the job market, and then the reaction was equally baffling. So what I'm going to do is I'm going to start off by going over the week's numbers, see what these major indexes have done for the week, start you at the bottom, work our way up to the top to get a perspective of kind of how maybe sentiment is rolling into specific markets, and then we'll look at the jobs and we'll look at the Fed funds futures, which to me today was like, what? This didn't make any sense whatsoever. So let's get started. There's my nice glass of whiskey for you. And the cheering over here, you see I got people off the side. It's I wanted to have I always try to have a Friday graphic that reflects what happened for the week. And I think that this actually does. There was, at the end of the week, pretty much a positive week for most of the major market indexes. So I think there was a lot of jubilation, especially with jobs. So I saw this, I thought this reflects, people getting jobs or more employment in a good situation. So I had a little cheering going on for our background of today's poster. Now, let's run down the numbers for the week of August 5th. Or August 1st, excuse me. The worst performer out there was crude oil, down 10% on the week, and I will show you those charts here one by one as we go through it, just so you can see the weekly lined up statistically, so you can see them. 10.38% for crude oil. There's that giant red candle, and we kind of mentioned this. And look, it feels like it's getting weaker. Had that line at 93.60 and said, look, if it gets below that, it closed below there, could see some significant downside moves. I don't know if we'll get all the way down here to 66. I mean, that'd be another 30% down from where it was breaking from, but it is definitely a potential here, especially if we start to see more dollar strength. So crude oil was by far the worst. There are no really clear levels for me on the weekly time frame of the crude oil chart here. You can kind of see there was some consolidation right here, and I personally think we're below that. So next stop for crude oil, if you're looking at the weekly, it looks like it's down around 66, 67. Now, if I switch this over to a daily, I'll get a little bit different perspective of it. Here is your daily, and you can see there isn't any really what I would call incredibly strong demand zones here. There's a lot of little tiny ones. You can see a small one maybe around 83, you get another one around 78, you get another one right around the 70 mark. So there are a few demand zones, but nothing that just screams at me like is a good buy point. So at this point, I hate to say it. Actually, I love to say it because as a consumer, what do we want? We want oil cheaper, right? That would certainly help the inflation discussion, and then all of a sudden our markets might start to look a lot more rosy. So if this continues, which I think it will, you are seeing lower lows, lower highs on the crude oil chart. My guess is that's going to continue. So if we get a rally back up to 93.60, short it. Looks like that's the spot to be going short. All right, that was your worst performer for the week was crude oil. We'll move up our list here, and then we're jumping over to Bitcoin. Here is the daily for Bitcoin. Really didn't do much this week. Down 4.31%, really traversing sideways. You can see, surprisingly, 5 really small, compressed, narrow range days, which you generally don't get with Bitcoin, right? You usually get a couple small days followed by some just monstrous big booms. The good news for anybody like myself who is long and bullish on crypto is it's making higher lows. So what I'll be looking for the next couple weeks is I need this line to remain intact. Now you can draw it wherever you want. Some people might draw it there. You could be more aggressive and draw your trend line through here. I just needed to not come back down to these lows of 21,000, right? Just keep slowly traversing up, make some new highs, and grind back into an uptrend and get everybody talking about the uptrend. That's really what I'm looking for the next few weeks here with Bitcoin. Even though I still have this looming belief we're going to go lower, the charts are telling me, screw what my belief is. My opinion doesn't matter. The charts are saying higher highs, higher lows for the past month and a half. Go with it. So go long on crypto. I know it sounds crazy. That was number 6 on our list. All right, what do I got next? Moving on up the list from Bitcoin, we had oil, we had Bitcoin. Oh yeah, Dow Jones Industrial Average. So let's get the last, the weakest of the indexes out of the way. Here's your Dow for the daily time frame. Look, did you expect it to be real strong? I mean, it's come right into this overhead supply. I feel like it's just looming right below it. My gut was telling me we'd actually rally up a little bit further into this demand or supply zone, right around, let's say, 33,000, but we didn't. So, obviously I was wrong on that one. I didn't have any money on this trade, which is good, but still hesitating right below this area of supply. Did this touch that we saw back on Monday, did that erase any of this overhead supply? I don't think so. I think that supply level is still there, so we'll have to wait and see what happens for the week going forward, but down 0.31% for the week for the Dow Jones. All right, moving on up. Next one is going to be S&P, and now we turn into positive territory. Things looking a little bit green here. 0.22% for the week for the S&P. Here is the ES futures. Again, you guys know I shorted yesterday on the S&P. Was looking decent today, but I'm still not convinced. So I have to be very careful with this one because I am definitely going counter trend, and I'm playing that overhead supply level that we are in right now on SPY. So that yellow box, it is absolutely my roadmap in this trade. If that's violated, I got to get out and call it what it is, a losing trade. But for now, I've got a small little profit, and we'll see what happens over the next couple weeks if this drifts down from those levels. But it was a positive week, 0.22% for the S&P. Moving on up, we're almost at the top, and then I'll dive into more fun stuff. I know some of you are like, this is boring. I know this. I watch CNBC. You know what? My show is way different than CNBC. I'm not paid for by anybody, and I'm not manipulating these markets like they are on a daily basis. All right. I think this is number 3. We've got G to the L to the D, gold. How shiny it was this week, 0.51%. So 0.5% gain for gold. Here is your daily chart of it. Of course, today giving back almost 1%. Shorten that box also. Good, Margaret. And again, the big challenge for me in doing this show, and let me digress here for a second. Years ago, I did power trading radio. I did that for almost 10 years. I was 1 week shy of a decade of power trading radio. That's every single day, Monday through Friday. I only took 2 weeks off per year. I've done more shows than the Seinfelds and Jay Leno and all these guys because I was doing them constantly. One of the things that bothered me about doing power trading radio is I wanted to have something fun. I did something called the Power Pick of the Day. And in the Power Pick of the Day, I was just simply looking out maybe for tomorrow. What's a trade setup that I'm looking at that I find interesting? And I'd always look out there. I'd scan the markets. I'd find something and say, here's my entry, my stop loss, and my price target. Now, that by no means was telling everybody go trade that. That's what my trade was. You have to make your own decision. And ultimately, why I stopped doing that and why I don't do it here on this show is how can I be polite? I don't want to be so mean on a Friday, but some clown threatened to sue me because he had taken a trade that I said was the power pick of the day. And I said, here's your entry, here's your stop loss, here's your price target. And the guy said he lost a ton of money. And I'm like, well, how did you lose money? How did you lose a ton? Because you have an entry and a stop loss. So you know exactly how much you're risking per share. So there's no way you could have lost a ton of money. He's like, well, I didn't use a stop loss. Then that's on you, my friend. But the threat of litigation just made me go, you know what? I'm not going to do those anymore. So if you are looking at this and saying, hey, that's supply zone, certainly make sure you wrap your rules around it and you stick to it, because as you've seen many times in the past almost 3 years now I've been doing this show, I can be wrong a lot, right? But when I'm wrong, I'm going to be very small with my losses. I can be right a lot as well. This has been a pretty good past couple of weeks for me being right directionally on a lot of trades I've been taking. So if you are short in that supply zone, just make sure you adhere to that stop loss, because I'll tell you what, the data that came out today, to me, just screams of higher market. I know, it's ugly. All right, so we had gold there. Gold going into that yellow box, which isn't really a great supply zone. This is really just designed to show consolidation, but we bounced back into it. And a lot of people believe that the bottom of this yellow box right here, right, that if you break down below that and you rally back up, that what was demand becomes supply. And you're seeing that happen this exact moment. Literally Thursday and Friday for gold futures are rallying back up and coming right back up to this area that was demand before. Now it might reflect supply. So something to keep your mind on, your eyes on for gold going forward. Now, was John O'Donnell my Kramer? No, I think he was kind of more my George. Don't tell John O'Donnell I called him George Costanza. He might take offense. Actually, John might have been more of the Elaine, but anyway, we won't go there. Next on our list, we've got gold there. Number 2, Russell 2000. A nice day, a nice week, but boy, check out the daily chart here. You know, I mentioned that I thought it was coming into this overhead supply level. It did. It's still at it, but you look at the next step up. It's like they're so close together. Some call this a level on top of a level. Do you short now the Russell because of this untested supply zone that's right actually at 1918 where we are immediately right now? Or do you wait a little bit and go for the one that's slightly higher and starts at 1935 and goes to roughly 1958? To me, I don't know. That's a judgment call that you have to make for yourself. Personally, I would be okay shorting this one right now, but have a very tight stop loss. Very tight. The only issue with this yellow box above us is it's already been tested, right? You had this base drop going all the way back to the 25th of April. Now it rallies back up, comes right into that area of supply, and ripped down. To me, it's been tested. So if it doesn't turn here, I kind of have the feeling it's going to rip through this overhead yellow box and maybe test that 2030 mark. Ooh, there we go. I did make it. Oh, yeah, Steve goes way back. I made a good Gilligan. That's right. He was the Gilligan. And I was Gilligan. He was a skipper. Yeah. Although the Gilligan was always the stupid one. I don't know if I don't know if I classify myself as I definitely have my moments. Don't get me wrong. All right, that was number 2. Was the Russell 2000. Of course, the big daddy this week, the Nasdaq 100, 1.89% for the week. And as we look at the daily time frame here, you can see looking great, came right through that area of supply, broke through it, no problem. Now it's off to the next one, which is pretty much where the Russell is headed to as well, right? If you look at the Russell chart, you notice there's that supply zone that goes back to roughly May 4th. Well, looks like we're just about to hit that one on Nasdaq as well. After that, you've got to stop at, let's say, 1450, and then all of a sudden you're back to the 15.2. So I'm bullish on everything except the dollar. Well, I don't know. I got to say, I'm still bullish on that dollar, even though it's just a pullback. There we go. I'd rather be the professor, Indigo. I'd rather be the professor. And by the way, Indigo, I don't know if you heard yesterday, but I gave you a shout out. Thank you so much for the contribution you gave me the other day. I do appreciate that. Makes a good, let's see. Yeah, well, I'll talk about that in a second, Brendan. I think that is a monstrous piece of news. Actually, I've gotten through these. The only other piece here that we got to pay attention to is this dollar index. So as Brendan says, I'm bullish on everything except the dollar. Here's that dollar chart, and if you look at it right now, we were calling out this 105 level as a target for this pullback and a bounce. So, we're kind of in this indecision moment. It did bounce, so far everything's working like it should as far as a trend. It's pulled back into a demand zone, rips up. This is textbook buy the pullback trade. Now, the big question is what happens going forward. Now, obviously, we got these highs right around 108, 109. We had a nice day today at 0.78% on the dollar. If that does rally up more, then, of course, we'll challenge the 109, and that should put pressure on the equity markets. Now, the big thing for me was the economic data that came out today, which I didn't, I thought I had a screenshot of it, but I don't, so let me go and bring one up for you. Looking at the unemployment number, I thought we were going to come out at 3.7. I thought it was just slightly above the current number, just because I'm hearing so much about layoffs, et cetera, et cetera. Well, we didn't get that today. Here is the news for today. And let me just show you average hourly earnings. It might be hard for you to see. Let me zoom in. You guys can see right here, average hourly earnings went up. They're expecting a contraction in average hourly earnings. It actually increased. That's great because that means more money. That means more spending and less likelihood of people running into debt problems. Non-farm employment change. They're expecting a significant contraction from 398 down to 250. Came out at 528, which means a lot of hiring going on. Lots of jobs available, lots of hiring. And then the unemployment rate dropped to 3.5%. Those news pieces right there should have had a very clear impact on the market. Market should have... What do you guys think should have happened? If the market is worried about a recession and contraction, all of a sudden unemployment's getting better, right? It's those numbers are dropping. There's more jobs being created, people making more money. Instinctively, the equity market should have done what? It should be pretty clear in your minds what those equity markets should have done. Let me bring up some charts here. We'll look at the S&P to give you an idea. Right when that announcement came out, I almost should have made this the popcorn trade of the day. It was nuts, right? Check this out. Here is 5:30 in the morning when that announcement was released Pacific time, and the S&P just fell apart. It was like just ripping down. It was 20 minutes of nothing but red, just a bloodbath. It's like, oh God, here we go. And you're going, wait a minute. Why is that? Yeah, Joe says uptick. Yeah, it should have been moving up. So this caught me off guard. I was like, wait a minute, what? That doesn't really make any sense. Now you can see the ripple effect here. We had the huge down, it rallied back up, and then just kind of consolidated. It didn't, make new highs. It just kind of ripple in the pond, a flag formation, or pennant formation, if you will. For those that aren't familiar with that, I will draw it for you. It's when you have a pattern that kind of looks like this, where the tops are getting lower and the bottoms are getting higher. It's a pennant formation, and generally that will break in the direction of the prevailing trend, which in this case really has been sideways, but more to the upside. So the market does what you don't expect it to do. Exactly, Glenn. But in this case, I try to put myself in the position of what's the domino effect of increased jobs and lower unemployment. What that does is it gives the Fed more ammunition to do what? So right now we are in an aggressive raising environment, right? We saw 50 basis points first part of the year, then it was 50, then it was 75, another 75. Right now the Fed is just like chunking huge lifts in the Fed funds futures rate because the market and the economy look like crap. If all of a sudden these things start to look better, what doors open to the Fed? I'm curious. I want to know what you guys think. What doors open to the Fed? Because right now the Fed is somewhat trapped, are they not? The Fed has to be raising the Fed funds to fight inflation. Now, inflation numbers are still there. We're not seeing them, collapse. They're still rising according to the last CPI, PPI numbers, as well as the core PCE. Now, next Wednesday and Thursday, you have CPI numbers and PPI numbers coming out again, so we'll get a clear picture of inflation. But this activity that happened today with the unemployment numbers, it's interesting. To me, what it should allow is the Fed to cut back on raising rates because the economy is doing good. Let's slow things down a little bit. However, we didn't see that. Check this out. Here is what happened with the Fed funds futures for today. So there was a 30% chance that we were going to get a, hold on, let me bump this up. There was a 34% chance that we were going to get a 75 basis point increase at the September meeting. That number jumped from 34% to 68% today. So for whatever reason, and maybe I'm just thinking of it wrong, maybe what the traders are thinking is because jobs are good, because unemployment data is great, the Fed can be more aggressive with raising rates to fight inflation. And maybe that's what's happening out there. It was kind of a strange thing to see the market take a big dive off great economic data, and all of a sudden the expectations are higher rate increases by the Fed. That one kind of threw me off today, but who knows? Joe says more rate hikes, higher hikes. Yeah, I thought maybe it gives them the ammo to not hike, to keep that gas pedal going. But again, if inflation is the bigger evil, remember there's three evils, are there not? You have GDP, which is declining aggressively. You have unemployment, and you have inflation. The big one, I think, is inflation. So maybe this was the green light for them to go and raise 75 basis points. We'll have to wait and see. Anyway, thought I would share that with you. Let's see. Also coming into election time, maybe that's why recession no longer means the same thing. Yeah, someone, I forgot who it was. Damn it, someone sent me an email, which I always encourage you guys to do. You can email me at TraderMerlin@gmail.com. And the email was like, Wikipedia took down the definition of recession. Okay, now we're really messing with things. Shmev Beat says stagflation. Well, stagflation we're not there, right? We have two criteria out of three for stagflation, and today's goes counter stagflation. Remember, stagflation, three components. Number one, declining GDP. Check, we've got that. Number two, rising inflation. Check, we've got 2 out of 3. And the third one is not just rising, but it should be aggressively rising unemployment. Well, today our unemployment actually went lower, not higher. So no stagflation right now. Now we'll have to wait and see over the next few months what happens with jobs data, if there are more layoffs going forward, and who knows what pandemic will come up next. Everybody stay inside because you got, turtle pox or some other weird disease that's going on that causes everybody to stay in their house, and another pandemic, another vaccine and drugs and all that stuff. Drives me crazy. Dave, what do you say? I think unemployment is low because people learned how to make money on their own during COVID and not returning to their crap corporate jobs. I think that's part of it. I do think a lot of people have side hustles and are doing different things. I also feel like a lot of people just stop looking, just milk the system, right? They're still out there collecting unemployment, but then they just fall off the rolls. And that's when you look at that U6 rate, which is a more, in my mind, a much clearer representation of what inflation is, and that is significantly higher. Let me just look that one up here just so I can show you what the U6 rate, let's see, U6. There's the U3 and the U6, and I always like to bring up this one from the BLS, which is the Bureau of Labor Statistics, who makes the report, and here you guys go. Currently, the U3 is what we're looking at, and you can see right here, it fell to 3.5%. The U6 rate has us at 6.7%. And from pretty much everybody I know and talk to that's not just a financial banker, most economists are going, the U6 is a much better measurement, but it doesn't look as good to present to the American population. So they just give us the U3 rate, which says 3.5%, but the U6 rate is about 6.7%. And the good news is they're both declining, right? All of these measures are declining, which is obviously a very positive thing. Yep, gig economy, yep. They're still working from home and love it. Who doesn't? There is a monkeypox outbreak, Brandon. I know. It's happening to a specific community that I'm not really tied closely to, so I think I'll be safe from. I mark myself safe from monkeypox. Okay, so that was kind of your week in total. I don't think of anything off the top of my head that was so noteworthy that I wanted to bring it up. Oh, yeah, let's bring up the clown joke idiot stock, HKD, just because I love it. Down another 28% after hours today. You guys remember the show I did a couple days ago on this, which was HKD WTF. Here it is. And I'm just going to zoom out, and I have a couple levels, vertical lines here. This vertical line, I believe, is where insiders can potentially start to sell their position, which means much more supply coming on the market. And September 1st, you guys remember I said on this day here, on August 2nd, I said that HKD will be under $100 by September 1st. And here we are when we did that show on Tuesday, we were at $16.80, and we're already at $513. That thing has fallen $1,100 in just 3 days, and it's going to fall even more. This thing is an absolute joke, just ridiculous in my mind. All right, sorry, I'm on a rant over here. It's the whiskey, folks. It's the whiskey. Joe says, what is the lag on that data last 2 months or 3 months average? Not sure, Joe. And honestly, I don't really trust it. I don't know what they're calculating. I've looked at it before, and it kind of, I don't know. The deeper I dive into how these numbers are calculated, like CPI and PPI and even GDP, I just kind of throw my arms up and go, okay. I just wait for that number to come out, and then I'll look at how it's trending. That's really all I care about. Is that a Reddit play? It could have been a Reddit play, Margaret. That HKD, it may have started there. It's one of those ones that, once it starts moving and gains like 100% a day, it's on a lot of people's radars. A lot of these Reddit traders, Wall Street Bets, will jump on that thing, and when you look at the numbers, it's like, guys, there's no possible way. This is the number 10 company in the United States by market capitalization, and nobody's ever heard the name, ever. It's just mind-boggling. Brendan, oh, you can move down here, buddy. We'll welcome you down here. I got an extra room. You can come crash at my pad. Brendan says, here's the biggest bright side for the U.S. economy. You aren't Canada. I would actually say here's the best thing for the U.S. economy is we're not Europe. Europe is they just started. Remember last month, last month, they finally raised off of zero on their Fed funds rate to 50 basis points. And it's like, guys, you're like a year too late. You're so far behind everybody that inflation could continue to be a real big issue for them going forward. Yep, Mark Wass says extended unemployment is over. True, very true. Low unemployment could be for boomers resting on large quantities, and no one is there to backfill them. What? I thought I saw pooping a blue label. I was like, NJ, you might want to see a doctor, buddy, if you're pooping a blue label. Popping a blue label. There you go. What is the commitment of traders? So the commitment of traders, guys, is something that I actually have done a show in the past with this one. I think I did it on here. It may have been on Power Trading Radio with Don Dawson. Maybe we'll do a special on that one. But it's a monthly report that's released that shows the buying interest of commercials, producers, and speculators. So you can see the buying trends here. And again, it's like knowing which one's the most important one. They're the driver of that market. Producers are the ones that are driving it. So if you see producers are out there just unloading in record amounts, start shorting, right? Sell that thing, because the producers are the ones who are going to flood the market with supply. And if you flood the market with supply, well, prices are going to be going down. And producers know from their business model what's a cheap price for their commodity and what's a high price for it, right? You're not going to expect a producer, and again, this was a Skilled Stocksman mentioned this on the chat on YouTube's channel in a comment, said one of the biggest things I took from yesterday was that there's a floor price for these commodities, and there absolutely is. Let's just look at gold futures continuous contract. Here's a daily. I think you guys can pretty clearly see that there appears to be a floor on gold. It's just for the past 2 years, it hasn't really dropped below 1,600. Now, I'm not in the industry. Brendan probably will be able to tell you what the actual floor is for gold. But if you're a producer of gold, right, you're a mining company and you're extracting gold out of the ground and whatever, a mine in Africa or something, and it costs you $1,600 to produce that ounce of gold, but the price of gold falls to $1,200, are you going to sell anything? No. No, you might actually start buying some because you can buy it cheaper than it costs to produce it. But if all of a sudden gold got up to, look at this chart again, got up to about 2,000, which is that double top you see here on this daily chart, as a producer, you might be looking at it going, we pull it out of the ground for $1,600, it's 2,000, that makes we make a 25% profit margin on this gold, buy it, extract it for 1,600, sell for 2,000, that's 25% gain. Then I'm going to unload there. And you can see that in the Commitment of Traders reports, because you will be able to see what they do, not just for gold, but for pretty much every commodity out there. So Commitment of Traders, if you're a futures person, is critical, especially if you're trading commodity futures. I remember that Nikola was $80 and you said it'll come back to 10 soon. That was, yeah, that's a good one too. Nikola, oh boy, NKLA, right? So long ago. Man, we're at 8. Yeah, and here's the funny part. I still wouldn't touch Nikola. I still would not buy Nikola. Now, there are a couple that I'd be interested in maybe buying long-term. Rivian. By the way, I don't know if you guys saw, I think it was either Rivian or Lucid. This might be the biggest troll I've ever heard in my life on social media. I want to verify that this is true, but apparently some analyst said, I want to say it was Rivian, but Rivian, made 50, I'm making up these numbers, guys. Just here with the example. I'll see if I can find it. But like Rivian made 58 vehicles and they were supposed to make 100. They missed their earnings by this much. And Elon Musk trolled and said, I had more kids in Q2 than they made cars. And I was like, that has got to be the most hilarious troll by the richest man in the world ever. I had more kids in Q2 than they produced cars. Thank you, Elon Musk. You are awesome. I hope that was a real tweet. Maybe somebody fabricated that one, but it was brilliant. Absolutely brilliant. Gold miner. So Brendan, I know you're in deep in this stuff. Gold miners make money above 1,200. Some can do it for less. That's only a low grade quality. Yeah, and you get an average there, right? But over time, and I'm sure Brendan, you've been studying this a lot deeper than I have. Over time, that cost is going to keep going up because those mines it's going to get harder and harder to find gold. So gold, that floor will start to raise and raise and raise and raise. Very unlikely that you're going to see the cost of extraction of gold decline significantly, unless they have some automatic robot digging machine that just bores through the earth and does everything itself. I just don't see that happening. But, I don't know. My favorite economy right now is those Bitcoin. Mine as well. And I'm long on it. All right, I will continue. You guys have been sending in a ton of great comments. Margaret says, is that a self-fulfilling prophecy, commitment of data, a commitment of traders? No, it's not a self-fulfilling prophecy, but, let's take it from the perspective of automotive diagnostics, right? So you take your car to a reputable, good mechanic. They're going to plug in your car to a little computer, and it's going to be running diagnostics and checking which areas are working best. In my opinion, that's what commitment of traders is. It's running an internal diagnostics of the commodity, saying who's buying, who's selling. And because you know the different types of people that make up producers or commercials or speculators, right, and their goals, they're very different. So by knowing their objectives and knowing their actions, that might lead me to interpret the current trend and forecast where it may be going in the future with better clarity. I unfortunately am not a heavy commodities trader. I just have too many things going on and too many trades going on to focus on commodities. But I'll tell you, if I had more time, I would actually focus a lot more on commodities. I find it fascinating, but you have to understand most of the asset classes that I study and follow and trade on a regular basis all fall under the same umbrella. They're all impacted by GDP numbers and presidential statements and CPI and unemployment. They're all impacted by that. If I line up corn and I say, okay, let's do some analysis of corn, I can't look at the same thing. GDP, CPI, inflation, a president doesn't impact corn. What impacts it is weather, mold, bacteria, supply and demand, which of course I think that's a great document that Don Dawson was talking about yesterday, that U.S. Department of Agriculture report, which is the, the World Agricultural Supply and Demand Estimate document, which comes out next Friday. That will give you a clearer picture to see the changes. It's like its own special world of data and study to understand deeply commodities. And I just don't have the time, unfortunately, to study it. Gallo, you can find commitment of traders on most trading applications. Elon said that the annual meeting. Oh, he did? Isn't that great? Maple Leaf, that's got to be one of the most hilarious comments. I had more kids in Q2 than they made cars. Cheers, Elon. You're the ultimate troll, and who's going to tell you not to do it? Brendan says, copper long-term goes higher, I think, but short-term China might have an impact. Yeah, right. That's what's great about what Don said yesterday. We can look at the copper chart here. If China wants to really screw with America, forget about having, military drills off the sea over Taiwan. Just say, hey, you know what? We're not buying your cotton and corn. That would have such a dramatic impact on us. So here is copper, which has been looking ugly but stabilizing and potentially rebounding here. If China says they're not going to be buying copper, then we have some problems. We definitely have problems. They are such a consumer of commodities, could have a big impact on us going forward. We'll wait and see what happens there going forward, but there you go. All right, let me go to some questions. So I respect those that go to the YouTube channel and put in comments and questions down below. By the way, I had some really heartfelt thank you. There were a couple of you that's posted some very nice comments about this show and about the guests, and I appreciate that. I do this because I love trading and I love giving back to people as well. Obviously, I don't go as in-depth as I would in a class that I would teach at OTA, but it's nice to share personal experiences and hopefully help you out in your journey along the way and just give you perspective from some other traders. I don't have as many guests in the program just from a logistics. I don't have time to find them all the time, but it was nice to get some of those comments. So thank you very much for those that were posting on the YouTube channel. I appreciate it. Here are some questions that came in. Michael, how does a positive jobs report drop the S&P and the euro a percentage? I had what I thought was a good-looking short on both this morning, but volatility kicked me out, took a loss on both. Expected 250, actual was 528. Yeah, and that was what I kind of covered at the very beginning here, Michael. It really is, it's the domino effect. Okay, well, I've got lower jobs. Lower unemployment. That means that we're stable there. I don't have to worry about spiking unemployment. So in theory, raising rates should have an impact on employment. It's making the cost of capital for businesses tighter, harder for them to get money. The money they're getting is more expensive. So if unemployment starts to spike up, well, they're kind of trapped there a little bit. But because unemployment is actually declining, at least from what the numbers they're giving us, that means that they have more flexibility with regards to raising rates to fight inflation. Remember, I talked about those three enemies to the market right now. It's looking pretty good. And I think that's why it just went the opposite of everything. And Michael, you said you took a loss on both. Hopefully the loss wasn't significant, right? It happens. I had a couple small losses this week, but I didn't take any big losses, and I got a couple small winners in it. So this week was from my equity and future side of things and options, pretty flat. Actually did better with my options, but my equity and futures were pretty flat with regards to my trade. So unfortunately, it's just market reaction, just crazy stuff. Another one. Let's talk about frauds. Not frauds. I can't say that. He's not a fraud. But Michael says, what is the deal with Kramer? I can't imagine he follows his own advice. Most of the time, it seems like he recommends to buy high and sell low. Like Netflix, he said to buy at 600 and sell after it crashed at 240. Look, he said the same thing for Coinbase. He's always going to be on the opposite side. And here's what you have to understand about most public people on TV. There usually is a vested interest on the part of these personalities for specific products or securities. So Goldman Sachs. Cramer used to work for Goldman Sachs. He has tons of high-profile Wall Street connections. So when Jim Cramer goes out there and says to buy something, my brain instinctively says somebody, Goldman or some other firm, reached out to Jim and said, hey, listen, we need you to talk really positive about Netflix or talk positive about Coinbase. Why? Well, we need it to go up because we got to unload some positions here. We might be overweight. Okay, well, yeah, I'll talk about that on tomorrow's show. Buy Netflix. And it pops for a day. These firms can unload all their stuff, and then it does what it should do, which is absolutely crash because sometimes those stocks are garbage. There's a fantastic video, and I've mentioned this to people in the past, what I'm going to do right now, because I don't think a lot of you have seen it. And you should watch it. Let's see, Jim Cramer, market manipulation. So I'm going to post this into the chat right now. I'll do the full interview. Bear with me. You might actually hear some audio. I'll try to pause this. Okay, perfect. After the show today, if you haven't seen it, watch this video. It is very telling at what goes on behind the scenes on Wall Street. Now, I commend him for talking like this because those who are in the industry know that this is how it happens. But the vast majority of retail people have no idea. So click that link I just put there. Don't watch it now. We'll wrap up here in a little bit, but watch it after this. It's only 10 minutes, and you're just gonna be like, "Are you kidding me?" It's like he's basically saying the Wall Street Journal, the CNBC people, the Fox, the Bloomberg, they're all lying. They're all promoting something because somebody said, "Hey, I'll let you use my house in the Hamptons or drive my Ferrari for a week if you just talk good about this company or bad about this company." Okay, great, yeah. And they just dump these things. It's ridiculous. Drives me absolutely crazy. All right. Good, Michael. I'm glad. I mean, and in your evaluation there also, I would definitely, you said I had a real tight stop loss. My instinctive instructor side of me is going to go, was your stop loss too tight? Right? We're using ATR. How'd you evaluate that? Oh, it said the video's not available? It has to be. I just played it. I mean, I could probably, here's what I would probably play the video for you guys, but YouTube will come after me and say copyright infringement, so I don't want to, let me bring it up again. I will see if I can play it on my end. Yeah, it's playing.
Welcome to Wall Street Confidential.
Yep. Well, it's up right now. I literally just watched it, so I'm playing it right now. Cool. Thanks, Brendan. Brendan will put it down below the video below. Okay, cool. So it works for some, maybe not for others, but it's worth watching. It really is one that, I'll be honest, it should change your mind about financial markets. And it's one of the main reasons I love doing this is because I'm laying it out there as I see it, and I've experienced it for the last 24 years. I personally think that the financial markets are one of the most corrupt, deceptive, misleading, lying, cheating, backstabbing industries next to politics. That's it. It's politicians and financial markets. And they're kind of one and the same if you ask Nancy Pelosi or anybody else who's actively trading. So, yeah, watch it. And I think what's good for me and for all of us is it should really make you go, okay, I have to not believe what I'm hearing all the time. For me, and I think many of you right now, the belief should be in the price charts. Just look at the charts, put blinders on to all this other crap that happens. As I've mentioned many times, I've got this list right here. Number 3 says ignore the news, but listen to every word of it. I want to know what the sheeple are being fed, but I don't trust it. I don't trust when a press release comes out from Goldman or Merrill Lynch or Morgan. I think it's all lies. I automatically think the opposite direction. There was a lot of documentation years ago where they were separating the analyst from the trading departments at these firms. Well, why would you do that? Because an analyst would walk over to the trade desk would walk over to an analyst, and this, let's say it's Morgan Stanley or Goldman Sachs, doesn't matter, but they're separate departments. The trade desk might find that they're underwater big on a position. Let's call it, I don't know, Apple. They're losing huge on Apple. They bought a big position, it's been declining in price, and they're like, oh, we're getting killed. The trader desk will walk over to the analyst, and they tell the analyst, hey, we need an upgrade on Apple. And they're like, what? Apple looks like crap right now. Do you like your job? Yeah, I love it. Well, then you create the best argument for a reason why people should buy Apple. And they issue this great press release. They'll go and, they'll go on to Fox and Bloomberg and CNBC and spread this information of how great Apple is just so the retail population buys it. And the whole time, that firm is unloading those shares. I've seen it happen with my own two eyes on upgrades and downgrades all through the late 90s when I could actually watch Goldman Sachs on the screen. I could see it, right? I would look and see GSCO. GSCO is Goldman's ticker. And he would issue an upgrade saying, buy this stock. And all day long, he would be on the inside ask on the level 2, which means he's selling. And his argument is, well, we liked it at 20, but it's a sell at 30, and it gapped up to 30 today, and we're selling. It's a scam. So don't trust the market. Lots of great lawyers on Wall Street. Yeah, they're the ones running a lot of the firms. So again, you should watch Billion. You know what, Joe? I actually just pulled it up. I think I'm going to watch that one. I'm trying to watch less TV. I'd rather be. I would rather learn something, make my brain better. So I'm learning German and other things along the way. Let me see if I get some more questions here. Okay, this is a crypto question. Jeff, probably here with us today. Thank you, Jeff. I saw a piece last night on Bloomberg with the CFO of MasterCard being asked if they were getting into the crypto space. The answer was basically, once the regulation is in place, it sounded like they were on board. You mentioned all these crypto companies for doing transactions, but doesn't it make sense that all of the credit card companies would jump on the bandwagon since they already have the infrastructure to process transactions? Seems like a slam dunk. What's your take? Okay. Hey, Thomasina, don't watch it now. You got to wait till the show's over. Here's the deal. Credit card companies like Discover, American Express, Visa, MasterCard, take the big four. Those big four have almost a monopoly on the cashless payment systems, right? However, if you're a business, you're losing 3% or more depending on the credit card that's used because of those credit cards charging a fee and your banks. So remember, when I swipe my card, my bank takes a percentage, Visa takes a percentage, and then the bank that money is being transferred to takes a percentage, and it comes out to be roughly 3%. What if, and here's the thing, Jeff, you're probably right. Yeah, MasterCard would love to get into crypto. They already have the system. Crypto is an absolute threat. Now, the thing that Visa and MasterCard might do is incorporate and say, if you have crypto, you can use our network, and they're still going to make that 3%. The problem has not been solved. It still is a corrupt system that gives Visa, MasterCard, Discover, and American Express almost unlimited power in controlling payment flow, and etc. What crypto is doing, it's saying no longer should I have to go through bank, Visa, and then bank. Now what it's saying is I have my own wallet. My wallet is the bank. And if I can connect my wallet through the business's wallet, I have now eliminated 2 banks. And because of that, I don't need the Visa system. So in that scenario, there are some technologies out there right now that work for this, but I'm hoping that I didn't have time to make visuals for this. But you can see there's this curve. If I use a Visa, I got to swipe it. My bank takes a percentage. Visa takes a percentage. And then when it gets deposited in the other person's account, a percentage is taken. With crypto, I'm going peer-to-peer. I'm saying, I want to buy your product. You want to sell it. I don't have to talk to a bank because our wallet, our digital devices are the bank. So now all of a sudden, those transaction fees go from like 3% to maybe 0.01%, which means businesses make more money, profit margins get better. And who hurts? Visa, MasterCard, American Express, etc. So to me, it's not the same thing if Visa says we're getting into crypto. Visa already has the monopoly on the market. Crypto represents the threat that could remove them altogether. And that will take some time from an adoption perspective. And I can assure you right now, all those 4 I mentioned, especially Visa and MasterCard, are on Capitol Hill lobbying against this. They do not want it because it represents a threat to their business, big time. So I don't think that Visa and MasterCard are going to start their own crypto. What they will probably do is say, okay, if you have Bitcoin, we'll allow you to use your Bitcoin on our network. But they're still going to take that 3%. Hope that made sense, Jeff. Linda, and then I'm going to read some listener questions here and wrap up. Holy cow, time flies when you're having fun. Linda says, since Voyager is temporarily out of business, can you suggest another crypto broker, please? Look, Voyager and Celsius and Nexo, BlockFi, those are all lenders. And there's a problem with them because of what happened with Three Arrows Capital and just systemic failure of the lending side. If you're looking to earn yield on your crypto, Linda, I think it matters what your goals are. If it's lending that you're trying to do, like Bitcoin, you can't stake Bitcoin. So you lend it out. There really aren't great sites for that anymore. And I would hold off on that right now, at least for a little while. If you're just trying to keep your crypto safe, get a nano ledger, get a Trezor, get some a hardware wallet. I think I just saw an HW wallet. Chris says, hardware wallet. How do I do that? Look, here's one right here. It's called a nano ledger, right? Nano ledger. You can use a ledger. You can also use a Trezor. Those are the two main brands. My recommendation to everybody here, do not buy it secondhand. Don't try to skimp and buy it used. Don't buy it on Craigslist. Don't buy it on OfferUp. Don't buy it on Facebook. Don't buy it on eBay. Only buy your nano ledger or your Trezor from the manufacturer. There's an issue there. You want to make sure you have that safety and security. Basically, you buy one of these devices, plug it in, set it up, keep your seed phrase safe, and now you can transfer your crypto there. It's a great, simple, easy way for you to keep your assets off of exchanges. You control the private keys, which means it's your money. There's a phrase in the industry that Brandon would love, I'm sure, and you know it well, Brendan. Not your keys, not your crypto. So right now I have some crypto sitting over at Coinbase. It's not mine. I don't have the private keys. Technically, it's Crypto.com's. I have crypto sitting at Voyager. Voyager just declared bankruptcy. Whose assets are they? It's Voyager. So now it gets sold off in the estate in the bankruptcy process, and I'll probably get 30% of my money back. It's crazy. I have 5,000 left on Coinbase. Yeah, I mean, I wouldn't freak out so much about Coinbase. The deal that happened yesterday with BlackRock and Coinbase is huge for crypto, guys. This is, if anybody's saying it's a scam and a failure, BlackRock has $10 trillion under management. $10 trillion money manager, right? They're one of the largest wealth management companies in the world. I think might be the largest. And now they're connecting with Coinbase saying, we'll allow our customers that use the Aladdin network to trade on Coinbase. That is massive. That's a stamp of validation as well. There's no way that Coinbase or BlackRock would really get into serious business with Coinbase if they were on the verge of default. All right. Also avoid Amazon. Yes, don't buy anything on Amazon, guys. It's funny, when I wear my suits and ties, I always wear undershirts. And I love the Calvin Klein undershirt. Not because it's Calvin Klein. They just fit better for me. And I bought some on Amazon, and I got them like, this is clearly not. It was some cheap crap made in China that someone just stamped Calvin Klein on. It was fake. It was garbage. So don't buy these Trezors or the Ledger. Remember, on these devices, you can put millions and millions of dollars. And if it's compromised, someone can steal that in a second. You'll never even know. Never even know. The serious, yep, exactly, Brendan. The serious institutional money's in the room. Yeah, now keep in mind, BlackRock didn't buy Coinbase, right? They're just partnering up with them, but that's a huge vote of confidence there. All right, I am gone way too long. Yeah, okay, good. There really is nothing special happening on Monday with regards to earnings. You've got Dominion Energy reporting, and that's pretty much it. Let me see if I can get to some last-minute questions here. I just got a Ledger X. Do I need to transfer my old wallets to the new one? Well, if you got a Nano Ledger X, basically what happens is when you get your Ledger, right, or your Trezor, you plug it in, and it's going to ask you to write down a seed phrase, and it's really important that you write this down. The seed phrase is your golden ticket. That is what allows you to access this device, which could have hundreds of different cryptocurrencies on it. If you lose that seed phrase, your cryptocurrency could disappear forever. So I cannot stress how important it is that if you are being your own bank, it sounds grandiose to say, oh, I'm my own bank. Banks have so many levels of security to protect your money. If you plan on being your own bank, as I am with my Nano Ledger, with my device, you better be incredibly careful. And Brendan, back me up on this one. Am I right here on how critical it is to keep that seed phrase safe? You know, if you haven't written, usually a seed phrase, guys, is 24 words, usually. If you miswrite those 24 words on a piece of paper, you might lose access to all your crypto. If a cup of coffee spills on it and all of a sudden you can't read it anymore, that crypto's gone forever. If your house catches fire and you got it in a locked box in your closet and your house catches fire and that paper's burned, it's gone forever. So you have to do whatever you can to protect yourself with your crypto assets. How do you find the seed phrase? When you install the devices, when you first start them up, it will give you the seed phrase. It's how you install the device. Right? Here, let me real quickly show you. I'll create a wallet here. Now, this is just it's called F Wallet. Right, so this is a phantom wallet. This is just as an example. I'm going to go here, home. I'm going to say create a wallet. Okay, so I'm just going to make this 1, 2, 3, 4, 5, 6. Okay, and then I do it here. 1, 2, 3, 4, 5, 6. I think that's it. Oh, they're not the same. I gotta have the symbol. Okay, hold on. Shift 1, 2, 3, 4. 1, 2, 3, 4. All right, and I'm gonna go Shift. Okay, so why? Make sure to enter 8 characters, including uppercase. Oh God, it's just so terrible. This stuff drives me nuts. I'm just doing this to show you the seed phrase. Okay, so bear with me. Even a fireproof safe indigo, I wouldn't trust it, man. I wouldn't trust. I have mine in a safe deposit, and I'll explain my ultimate way. But let me go do this one more time here. Apologize it's taken so long. Let's see. 1, 2, 3, 4. 1, 2, 3, 4. Okay, and now we'll put it here. 1, 2, 3, 4, 5. God dang it. All right, I'm just doing the code. All right, there we go. So now, this is your seed phrase. So what I'm just showing you right now is the most vulnerable my wallet could ever be. If you were to write these words down, and this you can see here, pet, labor, scale, gossip, expand, shoot. This is all what's called BIP 39, Bitcoin Improvement Protocol 39. It allows for what's called a hierarchical tree. And this series of words will allow you to access multiple accounts through one device. So here's what's cool. Let's say, hypothetically, that this is the seed phrase for my nano ledger. Okay? And Mimi says, if I lose the ledger, what will happen? You took the words right out of my mouth, Mimi. So let's say my dog gets this and chews it up, or it gets stolen, or I literally take this through and I put it in a blender and I chop it up and it's just fragments of just garbage. You're like, oh my God, my crypto's gone. No, I could buy a brand new ledger, install it, and then when it says input your seed phrase, I just put this information in, because on any device that is BIP 39 compliant, any of them, which is Nano Ledger or Trezor, you put in this seed phrase, it will always access a specific set of addresses. So even though my initial device is destroyed or stolen or burned or melted, all I have to do is put that seed phrase in on any device and it'll go, okay, here's all your stuff. That's how it works, okay? Now, here's something that I haven't done. I've been planning to do it for weeks, which is stainless steel washers. So what I'm doing is I'm putting my seed phrase on stainless steel washers and keeping them all safe. So if the house does burn down, or the safe deposit box app burns down, it's gonna be fine. Stainless steel will survive a house fire, especially a stack of washers, and the letters will be fine. Am I being overly cautious? Yes, but remember, on my device, it's not like, on my Nano Ledger, it's not like I have $200 or $500 or $1,000. I have a lot of money on there, and I cannot risk losing that. I mean, if I did, man, I'd lose my mind. That's a lot of capital on there. And, it might make sense to move them to multiple devices, spread it around so you don't have all your crypto on one device. But I tell you, it's really, really critical that you have that seed phrase written down. You can use steel plates. Yep, steel plates to engrave it. First 4 letters of each word. Exactly. Anyway, I could go, I plugged in but put no phrase. That's how you're going to have to restore it. I mean, when you restore your wallet, that's how you have to do it. You have to put in a seed phrase. Correct. Brandon says the seed phrase is generated cryptographically from your private key. It's basically your private key to authorize account operations. And not only that, but it will give you a full spectrum of addresses. It's because if I put in a seed phrase from my Nano Ledger, I can access a Bitcoin account, an Ethereum account. I can access tons of different accounts all in one place. But again, it just means, how on top of it do you want to be? One of the reasons I think I love crypto so much, and I think that Brendan loves crypto so much, is this: it's basically a middle finger to the financial firm saying, I will take control of my own money. I don't trust you. I don't trust you Coinbase. I don't trust you Binance. I don't trust you Kraken. I don't trust you JP Morgan, Goldman Sachs. I don't trust any of you financial firms. I am controlling it all myself. Thank you very much. That makes it fun. All right, let me wrap up here. I'm going to go and I'm going to a country concert tonight. Shoot me now. I'm going to a country concert. I already forgot the guy's name, but we're going down to the 5 Point Amphitheater to go see what Thomas Rhett is happening tonight. Shoot me now. She's trying to get me to wear a cowboy hat, but I don't think that's going to happen. But I'm off to go see a concert tonight. Hope you guys have some fun this evening. If you guys have comments, questions, feedback, you can email me at TraderMerlin@gmail.com or put them down below the YouTube video. Of course, that's where I got most of the questions for today's show. So thank you guys so much. So I won't need to move from my Nano to my X. You don't have to. No, you don't have to. No, I'll be driving. I'll be driving, Michael. But cheers to everybody. I have my whiskey right now. I hope you guys have a fantastic remainder of your day. Have a fantastic weekend. I'll see you on Monday. Take care.